Welcome to Global Money Talk, brought to you by Sampro TV. Happy New Year to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today is Tai Wong, independent proprietary trader. Good morning and Happy New Year, Tai. Welcome back.
Happy New Year, Remy. Great to be back. Good to be here. First day of the year. It felt like the little vacation was very, very short.
I know, and this is the time of year that people start thinking about the year ahead on Wall Street, but of course it's also the time for New Year's resolutions.
Yes, absolutely, absolutely. So, what are yours? Do you have one?
You know, I don't have a New Year's resolution, but I was thinking about this before we started our show this morning, and in terms of, I'd say, resolutions or aspirations, perhaps it is to get more sleep.
Well, that's definitely an aspiration for me, although with enough of the kids out of the house, so hopefully I can actually accomplish that. But I always joke, my kids always laugh because, Dad, what's your resolution? I'm like, become less shallow. Because, what do I mean, Dad? Well, I should stop judging a book by its cover and just be a more deep, genuine person. But Dad, you never get there. And I said, yeah, I never get there, so I never have to change my resolution.
I really like that because I think sometimes when you ask people about New Year's resolutions, they might talk about their fitness goals. And even yesterday, walking around the city, I saw people running or trying to run or jog. And it is very interesting to see how long they will keep that up because I think it's really hard to stick to resolutions.
It is, and if there's something that you want to do, maybe you should just do it whenever you think of it and when you start. You don't have to wait for the new year to do it, I suppose. But my kids who want to go to the gym after our vacation, they said, oh, the first week it's gonna be terrible. The gym is going to be so crowded. You have to pick off times to go, and I feel that way. I need to go myself, but yes,
No.
it's going to be very, very crowded. But you know what else is today? It's actually I saw, and I'm a big fan, National Science Fiction Day. Now, are you a science fiction fan?
Well, I do like reading science fiction, but in terms of genre movies, I don't watch as much. But I am guessing you're a science fiction fan,
I
Tai.
am.
You
I
are.
am. And what I guess I've always loved about science fiction is, uh, reading it expands your, sort of your mind. I think, and people, the stuff that people dream of, a couple hundred years ago, sometimes
Absolutely.
reality now, and sometimes not. We don't have a time machine. That was H.G. Wells, and we don't have floating skateboards yet, like Back to the Future. But I loved Isaac Asimov
Yes.
with wonderful, wonderful ideas. One of my first science fiction books I ever read, and most recently, it's actually the Chinese set of novels, The Three-Body Problem,
Oh, yes.
which was really a stunner. I mean, I think I remember reading the second book, The Dark Forest, which is like, oh my, wow. I mean, the ideas are just tremendous, like things that we haven't thought about before.
Yeah, and that, what you just mentioned, there is the exception to the rule because I actually watched all episodes of that last year, so.
Oh, did you watch the American version?
Yes, the American
It was
version.
really. Did you read the books?
I unfortunately haven't,
So you
so.
should read the books. The first book is a little slow going. You got to slog through like the first 80 pages, and then it really picks up. And they've changed the story, but substantially. But they did it very, very artfully. So I think what I'm going to do now is actually, when I get a chance, is read the Chinese version of the
Oh.
Three-Body Problem, which is, I think, a little bit different, but probably more faithful to the books. And in some ways, I'm a little surprised that I guess it's such a big triumph for a Chinese writer, but it is very, very critical of the Cultural Revolution and and the regime in kind of a deep way. But a wonderful set of books.
And Tai, speaking of which, these are all topics that we'll continue to watch, especially when it relates to the market, because here we are at the beginning of 2025. Today is the first trading session of the year, and we started out higher for the major U.S. stock averages, but we're looking at a pairing of some of those gains. But before we get into this year, let's take a look back at 2024, because we did get back-to-back gains 2023, 2024 for the major U.S. stock averages, and of course, gold, Bitcoin soared last year too.
Yes, absolutely, absolutely. So let's just take a look at let's look at graphic number 5, and I'm going to just look at some 4 major markets. That's this is the so I look the S&P 500, gold, Bitcoin, and the dollar index, and they're just sort of a spread of markets I like to keep an eye on. And In December 2024, going back, the S&P was down 2.5%. Most of that towards the end of December, and also given that we had a tremendous November. I'm looking at the price action, and that's the chart on the left, and I'm a little concerned. The price action hasn't been good. Granted, it is the year end, but I think the market's a little moody. We saw almost 6,100, and now we've dropped 2.5% from the from I think or so from the highs, and market doesn't quite know what to make of it. We opened the new year up nearly 1% in the futures, but are now essentially more or less flat. After Tesla had some saw the saw their vehicles sold drop year on a year-on-year basis for the first time since 2012, and that's even given a heavy push in December to try to beat 2023. So it's a drop. It's partly because they've lost market share in China. It's also partly because there are some Americans who love electric cars who don't love Elon Musk and his politics now. So is it a signal of some concern perhaps? But again, S&P 500, I'm a little worried here. I don't know. Well, maybe worried is too strong. Concerned because I don't know whether we need a substantially deeper correction, or will the $3 or $4 billion of new money start coming in and slow in the absence of anything bad push the market higher. And if you're a if you're a fund manager and that's your benchmark, you don't want to not be in the you don't want to not be invested in case you slip up starting and you start to trail in the beginning of January. So a little concerned about the S&P. Gold is up nicely today, and if you look at the chart, it was down a little bit in December, partly due to the Fed, but up nearly 1% today. That chart previous today looks like it was consolidating and looks likely to grind higher. So let's move to graphic number 6 and look at Bitcoin and the dollar index. So Bitcoin hit a high of I want to say 108,000 before retreating in the second half of December. And now it's showing some resilience above 90,000, and we're sort of moving between sort of 93,000, 98,000. The one concern here is there's been a lot of profits in Bitcoin over holders over the past year, and are they going to take some profits now that we're in 2025, so they don't have to pay taxes for another essentially 15 months. So Bitcoin could consolidate. We had a Bitcoin expert here in early December who was a little concerned that we could have a steeper drawdown before resuming its climb higher. So a move above 110,000 would be great for the bulls, but doesn't seem like it's in the cards yet. So consolidating. Dollar index continues to be very strong, up 2.5% in December. Pretty unusual for the dollar. I think in part that's because U.S. interest rates are coming down, but look to be coming down more slowly than everybody else. That you look at that chart and you just can't be short. It's too risky being short. I don't love the dollar here, and if the yen rallies, and dollar yen is strong, the yen is pretty weak around 157. If you get a substantial rally in the yen, I think we could see a reversal in the dollar. But I look at that chart and I really don't like to short that.
Mm-hmm. Well, Tai, I think it's very helpful to look at the S&P 500, gold, Bitcoin, the dollar index to see how we ended the year as well as the month, because when we think about the double-digit percentage gains for the major U.S. stock averages versus how far the equity averages came since the election, we can see a little bit of divergence there. And as you highlighted with the charts, there are some areas for concerns on a technical level for all the assets that you mentioned.
Yeah, and I couldn't decide. I was thinking about this over the last few days. So you still have money coming in every day. We had $1 trillion just in U.S. ETFs alone, and that's basically $4 billion a day, give or take, right? So does the market need an excuse to sell off, or at this stage, or do they need an excuse to rally? So if that money continues to come in and we don't have any sort of bad news, we could correct a little bit and continue to grind higher. But as we were just talking about before the show, the market's just a little moody, and the headlines that we've seen over the past couple of days hasn't helped them. You mentioned that, and I didn't even see this, that there may be a conspiracy that the person who mowed down 15 people, and then and another 100 injured in New Orleans might not have been acting alone. And then we had that Cybertruck issue
Yes.
in front of a Trump property. So market's just it's a little moody. We haven't seen really a lot of sort of happy headlines, and I think it feels like we just need one, like a good story to start the year out with.
Yeah, you bring up an important point there because as we kick off the new year here in the United States, we heard about the terrorist attack in New Orleans on Bourbon Street, and shortly thereafter, what happened in Las Vegas in front of that Trump property. And of course, we're counting down the days here in the U.S. until January 20th, Inauguration Day for President-elect Trump. Only 18 days to go here, of course. So that is something that we're all anticipating here.
And just ahead, absolutely. And just ahead of that, remember we spent probably a couple of sessions talking about the dock workers strike.
Yes.
Well, they actually came to an agreement, but that agreement ends on January 15th, 5 days before the inauguration.
Yes.
And so the dock workers on the East Coast could strike again. We remember we're looking at the head of the union. He has this palatial house in New
Yes.
Jersey. The New York Post was flying drones over, and I think that actually kind of pushed the agreement. So now we'll have to see whether there's another strike or at least 5 days before the inauguration. Trump has said that he backs the dock workers, but the dock workers want something that I think is troublesome to the port operators and the shipping lines, and I think it may be troublesome for the economy, is they said, we don't want any automation.
Yes.
It's sort of a little bit of a light way of thinking of protecting jobs, right? We want to be less efficient so we can we can protect some of the existing jobs. So Trump has said he supported them, but Biden said he would not invoke the Taft-Hartley Act, which basically makes them go back to work while they negotiate. So I think Trump, may he got support from a lot of these union members, may give them a little time, but I think he's going to be a lot more sort of business oriented and say, well, we can't stop business from happening, and if this hurts the markets and the stock markets, then we'll make you go back to the negotiating table. So this has been on the calendar. People have forgotten about the holidays.
Yeah.
I think we could probably get through a week or two, certainly, before not really notice anything, given the inventories that that people have built up, and certainly the automakers have put away enough inventory for at least several weeks of strikes. But something to keep an eye on, in the waning days of the Biden administration.
Yeah, and I'm glad you brought this up because when we think about that date, January 15th, as you mentioned, it is only 5 days before Inauguration Day, and we covered the strike last year as it got underway. And in terms of concerns regarding supply chain, it really does affect the U.S. economy. And with the expectation and anticipation of tariffs coming down the line with Trump entering the White House, there's a lot to monitor here, isn't there?
Yes. Yeah, a lot of things going on, and interesting things like we talked about Nippon Steel and U.S. Steel,
Yeah.
and it looks like again trying to placate the the union workers ahead of the election. Neither side was willing to let Nippon Steel take over U.S. Steel, which frankly seems like a pretty good idea. I think Nippon Steel makes steel better. U.S. Steel is really struggling, so sort of a deep-pocketed partner seems like a good way to keep steel, at least some reasonable steel production in the U.S. But Trump says he didn't support the deal. Biden wouldn't support the deal. But over the last few days, Nippon Steel actually came out with a final offer saying, we will give you, the United States government, a veto over any plans to cut back on production, which is their ways, I suppose, of protecting jobs in the U.S. U.S. Steel rallied substantially on that, but I think it may still be an uphill struggle. Hopefully, sort of post-election, or excuse me, after the inauguration or before the inauguration, I think probably after that, this does go through. I think this would be good, good for the United States.
Yeah, it's interesting you mention U.S. Steel because in New York Morning Trade we are seeing the stock down about 0.7%, but as you mentioned, as we closed out the year, that stock did see a rally of over 9% on the session.
Right, right. And if it goes through, it goes through. I mean, I see on your panel it's trading at $34. I think the Nippon Steel offer is $55. So if you have some insight on this, it's probably might be worth a little bit of a flyer, but there is some downside risk if this eventually does fall through, and U.S. Steel could drop substantially from here. But since it's the beginning of January, and I think we'll do this every month, let's look at seasonality. Look at what January looks like for those four things that we look at. So if we go to graphic number 1, let's look at stocks for January and how they typically behave. So we can see that, and again, this is from barchart.com, a great website, lets you see this, for probably any index or any really commodity or asset, and it's very useful just to have a sense of what what seasonality is, and it doesn't always work, but it just does give you an idea. So, for example, this is the S&P 500. If you look at to the far right to start, December is typically very, very good for the S&P, but we were down 2.5% in December, as we mentioned before. But that comes after a 5.7% rally in November. So that's a little bit of a retracing of that. But if we move to the far left of the chart, January's seem over the last 10 years a little bit mixed for the S&P. A huge rally in 2023, a nice rally in 2024, but the years before that, 2020 to 22, saw losses. So particularly a strong one in 2022. So January looks like it is typically going to be mixed for the S&P. It's a little moody right now. Are we going to retrace a little bit more? That doesn't tell you a lot, but it tells you that January seems to be a month of uncertainty, although at the beginning of the last Trump administration in 2017, it did rally 1.8%, if there's sort of any guide of that, if 2025 will be a little bit different. Let's go to graphic number 2 and look at gold for the for the month of January. So December's tend to generally be very good, although it wasn't last year. And January's, 3 of the last 4 years have seen gold retreat. 2023 was a sharp rally, but generally, does recently, and I do have a recency bias because I think what we saw in 2016 to 2020 pre-pandemic may be a little different than what we have today. Also, January tends to be ahead of the Asian Lunar New Year, and that often can bring some demand for jewelry. But I don't know if we're going to see that in China, which we'll get to shortly. So up a percent today, but generally has been mixed in January's. The chart does look like it's consolidating. Wouldn't be surprised if it goes higher, but the first 2 months of the year tend to be a little weak for gold. Let's move to graphic number 3 in Bitcoin. So Bitcoin, December's are generally weak, and was weak last month, and then January's in the past few years have been quite strong, with the exception of 2022, where I think we had some sharp drawdowns to start the year, partly due to some inflation fears. But 2023 was a very, very good January, as was 21, just a modest move in 2024. I think we're going to be oscillating a little bit. If we look ahead to February seems to be a very good month for Bitcoin historically. Moving to graphic number 4 and the dollar index. So December's were generally awful for the dollar, almost at an 8-year losing streak before this past December, where a hawkish, kind of a hawkish or a careful Fed, I think, turned those things around. January historically in recent years have been good for the dollar, and February as well. So the dollar looks like it might have a little more room. Certainly, has had a good run. Not a chart I want to short, a little concerned about a correction in yen, but I think the trend is a little bit of your friend there. The Fed doesn't look like it's going to do anything in January, and most people have a March cut priced in, but beyond that, it looks fairly uncertain. I think two cuts this year may be a little a little lower than I think, but at this stage, the dollar looks strong, and it's hard to sell it right now.
Yeah, Tai, in terms of seasonality, this is the time of year that we focus on a potential Santa Claus rally or the January barometer. So I think it's good to take a look at seasonality and how these different assets tend to, or indexes tend to perform this time of year.
Yeah, and it's not, we often, people call it sort of a second or maybe even third order, what's the word I'm looking for? Sort of a second or third order driver is the word I'm looking for. First order is what is actually going on, earnings, excuse me, earnings and other things that are more direct. And seasonality, gives you a sense of what has happened in recent years. And there's certainly trends that you can spot there. Doesn't mean the trend always works, but when you see January's mostly green in recent years, that suggests that there may be some drivers underneath the market that gives you that that sort of seasonal push. So I think worthwhile looking for. I think we'll make this a feature at the beginning of every month.
Yeah, I think that's a great way to kick off the beginning of every month. And very quickly before we move away from this, you mentioned the Fed, and of course we are keeping our eyes on the Federal Reserve in terms of their upcoming meetings, their monetary policy, their projections. This month, their meeting falls at the end of the month on January 30th to the 31st. And in terms of data points, they'll be paying attention to next Friday, January 10th, we get the jobs report, followed by the week after that, we get inflation figures in terms of CPI and PPI. But I did want to take a moment to mention that next Thursday, January 9th, here in the U.S., markets will actually be closed to honor the life of former President Jimmy Carter.
Yes, a couple of things to sort of unpack there. In terms of certainly Jimmy Carter, whenever we have a president who passes, the markets are closed. The markets don't really like to be closed. I think that the people who
Yeah.
who run the markets, ICE, which owns the New York Stock Exchange, when there's no trading, there's no revenue. But I think the traditions matter, and I think I always value them because it sort of gives you traditions. I think gives you a link to the past, and it's our link to the future. And we wouldn't have all of this if we didn't have a full, vibrant, functioning democracy. And when a president dies, no matter who he is or how popular he was or was not when he was president, it's sort of worthwhile to say that we're gonna close the markets and sort of remember a president. And Jimmy Carter was a very sort of controversial and quite unlucky president. He had the hostage crisis, which he failed to solve.
Yeah.
Which is really is his biggest legacy. Although the Camp David Accords was something excellent that he did, I think, for which he will be remembered. But then he what he did as ex-president, he had the habit of criticizing his successors, which almost no president ever does, because they realized how hard that job was. But he did tend to criticize his successors, and as he also helped Hugo Chavez stay in power by signing off on an election in 2002 that he shouldn't have signed off on so quickly. He signed off after a day, and there was some significant abnormalities in that, as studies had shown later on, and that that regime, Hugo Chavez's regime, is more or less still in power with his successor 20 years later, and hasn't been good for Venezuela. But be that as it may, close January 9th to remember a president who, for all failures or successes, certainly most people agree that he was a good and decent and kind man, and different in some ways than the politicians that we have today.
And indeed, his Jimmy Carter's post-presidency legacy is something that many people do focus on, and I'm sure January 9th, many people will reflect on his life, a very long one at that, since he did live to the age of 100.
Remarkable. Lived to 100. He said, "I'm only going to do hospice, no heroic efforts," and I think he was doing hospice for a year or over a year. and may have been lucid until close to the very end. So I mean, sort of thankful for that. A good end, to a to a very interesting and exciting and long life. But I want to get a little bit to the Fed, unpack that a little bit. So January 30, 31st is only 10 days after the inauguration. Nobody expects anything to happen unless there's a gigantic, dislocation in the markets, because it'll be 10 days in the new administration, a lot of debt concerns, concerns like a dock worker strike and potentially other things, and there'll be so many moving parts that the Fed will likely sit on its hands and see what happens. I did notice that in late December, the PCE report was generally a 10th lower overall, which the market didn't really react so much to because nobody expects anything until March out of the Fed. But the softer PCE would make the Fed more willing to cut rates further. And as you said, we will get payrolls next Friday. It should be this Friday because it's only 3 Wednesdays after the end of the survey week. But with New Year's and Christmas, I think it's just too much for the Bureau of Labor Statistics to be able to get that out. That'll be important because I think they feel inflation is relatively under control. But if we get any weakness in employment, that's going to be an issue for the Fed. And on the subject of employment, we got weekly claims today. A really very low number, 211,000, and continuing claims dropped very, very sharply. I think a 3-month low in continuing claims, and maybe even the headline jobless claims as well. I looked into that. Part of it is in early July, we had a big spike up in jobless claims that we were looking at 245,000 a week, and that continued for actually June and July for probably 6 to 8 weeks. Now, you only get 26 weeks of unemployment now after pandemic extensions. Those are starting to roll off. So I think we're going to see continuing claims at current levels or even drop a little bit more in the coming weeks, just because that big bulge is now those folks have run out of their unemployment. So they may join the ranks of sort of longer unemployed, which is generally obviously not good news, but that number looks like it will stay at a lower level for some time. And the other data that we got today was mortgage data. And that wasn't that wasn't real happy for the for anybody who wants to buy a home. 6.97 on the 30-year mortgage, close to 7. That's about as high as I can remember in many months. And partly due to the holidays, I think mortgage applications fell like 13%, and we don't expect that market to start moving until probably the spring, in terms of the Fed. If there's another cut in the Fed, rates will start to creep down a bit more. But another concern, and here we're not worried about the front end of the curve, it's more the back end, the 10 and the 30 years, because of how our mortgage system works. You have a situation where with a lot of debt, having to be refinanced and then refinanced. Your people are talking about potentially moving from up to $35 trillion in debt that we have, up well past 40. That there's going to be a lot of issuance, and it could be issuance in all along the curve, but that might keep the back end relatively elevated, which might keep the mortgage rates high, and the real estate situation market kind of subdued.
Yeah, I think that mortgage rate data point was something that was a bit surprising, especially given the elevated levels. But as you mentioned, ahead of that jobs report, we did see that decline in weekly jobless claims, the headline number down to 8-month lows. And I'm glad that you brought up the continuing claims as well, because that is something we'll continue to monitor this month as well as this year as we get ready for everything coming down the pike this year. So as always, I look forward to covering the markets with you this year and of course this month.
It's going to be an exciting month. It's going to be an exciting year. Hopefully exciting in a better way than we've seen in the last few days.
Yes, absolutely, Tai. Well, thank you so much for joining me here, and you and I will be back next week together.
Thank you. Great to be here.
Great to be here with you. Thank you. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us, and we'll be back here tomorrow. Have a great day.